Can you see me right now?
Yep.
So are we all online here? Hello, everybody. If you can believe it, just about, let me see if I can get this set up better for you. Just 15 minutes ago, my Charter internet thing crashed. So now we're using an alternative source to the laptop. But hopefully everybody's hearing this, and I will be recording it so that you can go to my website later on and listen to this as well. So what we're going to do right now is I'm going to go over 5 major components of the bill, and we'll try to go over it on a very, very generic level and drill down to the details later on. And then you can ask questions. And most of the questions will be practical, I think. How do we do this? What do we do? What's the next step? That kind of stuff, and we'll talk about that. Let's start with the first thing. A lot of people are asking questions about rebates. Now, the rebates will be available to anybody who doesn't have an income level over a certain dollar amount. So if you're single, the rebate is for anybody who makes $75,000 or less. For head of household, it's anybody who makes $112,500 or less. If you're married filing jointly, it's $150,000 or less. The phase out, however, the rebate phases out over a period of time. The rebate is $1,200 per individual. So for a single person, it's $1,200. For a married couple, it's $2,400. For the head of household, it is $1,200 plus $500 for the dependents. You also get a rebate for every child under 17 years old. So if you are a married couple with 4 children, you're going to get $1,200 for the mom, $1,200 for the dad. That's $2,400, and then $500 for each child. So that's another $2,000. So that's $4,400. If you're a head of household and you have one child, you're going to get the $1,200 plus $500. That's $1,700. Now, if you make over the maximum, it phases out $5 for every $100. What that comes out in math is if you make over 75,000 but less than 99, you will get a prorated portion of the rebate. Same thing with head of household. It phases out between 112,500 and 129,500. And for married filing jointly, it will phase out between 150,000 and 198,000. And remember, the dependents are only for children and children under age 17. This will happen automatically. Sue's just walking here saying, hold on.
I don't think people are seeing you.
She's saying she doesn't think anybody's seeing me. Maybe that's a blessing.
Admit all. Nobody's seeing you. You ready?
Go ahead. Is everybody
There you go.
Okay, so is everybody hear what I said so far? Do I have to stay over?
Probably not.
All right. Well, I see some of you guys over there. I don't know if you heard what I first said, so I'm going to repeat it very quickly. The first category I want to talk about will be 5 categories, and the first one is for individuals who are going to get rebates. And again, to recap, the rebates are going to be based on whether you're single, head of household, or married filing jointly. It's $1,200 per adult and $500 per dependent child 17 or under. So and there's a cap on the salary you can make. For single, it's $75,000. For head of household, $112,500, and for married filing jointly, $150,000. Once you reach over that amount, if your rebate phases out over a period up to $5 for every $100, so that means for a single person, it phases out to 100 completely by 99,000. For head of household, it phases out completely by 129,500. That's with one dependent. And for a married couple with no children, it phases out at 198,000. But it basically, and how this is going to be given to you and paid to you is either through your 2019 tax return or your 2018 tax return. So if you haven't filed your 2019 tax return, the IRS will look at your 2018 tax return, look at your income, and and they already have your banking information. They will direct deposit that rebate, and that will probably happen very soon, within a week or so. Now, if you haven't filed the 2018 or 2019, you need to file a tax return right away. Or on contrapositively, if you filed 2018 and it was let's say you're a married couple and it will show $200,000 of wages, but 2019 will be, let's say, $140,000 of wages. Well, then you want to file the 2019 right away so you'll qualify. So you want to basically have the IRS look at the best return possible. And that's it on the phases. Well, again, I'm going to take questions and answers later on, but that's the first point I want to bring up. The second point is we're moving now to businesses and business people. For employers, the first thing that this just came out a couple of days ago. This was not addressed in my memos. They have something called an employee retention credit program. Basically, it's really amazing. They're saying beginning March 12th of this year through December 31st of this year, every employee that you have where you pay $10,000 or more during that period of time, you will get a tax rebate through your payroll taxes of $5,000 per employee, up to $10,000 of wages. So if your wages were only $5,000 to that employee, it would be $2,500 credit. So this means that let's say if I had 5 employees, in which 2 of them I pay them $5,000 each, and the other 3 I pay them, let's say, $100,000 each, I would get a tax credit of $20,000, $5,000, $5,000, $5,000 for the $100,000 each, because it's on the first $10,000 of wages, and on the other 2, it's on the first $5,000 of wages, which translates into $2,500 each, which is another $5,000. So that is $20,000 the government is going to give back to you for the employees that you retain. In my example there. Now that's for wages beginning March 12th, and this is just passed. This is very new. They're saying that they're going to start implementing beginning the filing of the second quarterly payroll tax return. So if we're doing your payroll, we can do the calculations for you. If you have an outside service, you got to make sure, if you're doing it yourself, you just got to make sure you're doing it right. The protocols or the guidelines, I'm sure, are going to be issued with 941s, but that can be very significant tax savings or cash savings to a lot of employers. Now, the next thing I want to go to, and this is probably the most complicated and the most important thing I'm going to be talking about, is the payroll protection programs. And this is to make it simple, a very complex thing simple. These are loans the government is going to give you that's very easy for you to qualify for, in which they are totally, if it managed properly, are 100% forgivable. And they are the applications of these loans start tomorrow morning. That's why I'm having the seminar today. And you got to get into the queue as quickly as possible, because frankly, they're going to run out of money very fast on this. And the way it works is that you take your 2019 payroll and you calculate that. And let's say, for the sake of discussion, your payroll was $300,000 for all your employees. And you divide that by 12, that's 25,000. Multiply that times 2.5. In my example, that's 62,500. And you would get a loan for $62,500 that's 100% forgivable, as long as you follow the rules. And it's a very easy loan to the hard part is calculating and doing things properly. The actual loan application is very simple. It won't take you more than 20 or 30 minutes to do it. We'll get to that later on. And everybody that's listening to this, that's self-employed, that's a business person, that's a corporation, you really want to get on this right away. This is very important. This is part of the SBA Section 7A program. Only SBA Section 7A providers can do this. Most major banks are aligned that way. There are special brokerage firms that deal with 7A programs. I can help you with all that. But let's get into the details a little bit. It's better than what I just said. First of all, the money on that loan is 75% of it has to be used for payroll purposes. The other 25% can be used for eligible business costs. And those eligible business costs are amazing. It could be utilities, it could be rent, it could be the mortgage interest payments, it could be certain types of supplies. This is where you need my guidance to make sure that you're spending it properly. My recommendation when you get the loan is you put it into a separate account and you disperse that loan specifically according to the guidance that I give you, so that 100% of the loan will be forgivable. Again, I'm trying to make a complex thing easy to understand. It's more complicated than that, but that's fundamentally how it will work. But it's even better than that. The payroll calculation isn't what I told you. Remember I said we took 300,000 divided by 12 times 2.5. That's if you're silly and stupid. Okay, I'm not calling you to be silly and stupid. The SBA is giving you a lot more than that. They're saying you can add to the payroll costs things like group health insurance, employee benefits, the SUI and ETT, those are state payroll taxes, and even stuff like, let's say, like in my firm, I hire Harry. He's a CPA. He's an independent contractor. He works for me, especially during tax season, but all throughout the year. I can include independent contractors onto my payroll costs. So the calculation is that it's fairly complex. So instead of that, my example of 300,000 that I gave you before, when you add in all these other things, it might be 500,000. Now you take 500,000, you divide it by 12, 500 divided by 12 times 2.5. Now you have a $104,000 loan, not a $62,000 loan. Totally forgivable if managed properly. This is really pretty amazing, and I'm concerned about how this can easily be manipulated for fraud purposes. So I want to tell you, there will be an inspector general hired just for this program. So if anybody basically, commits any negligence or fraud on it, there'll be criminal penalties against them. So make sure you do it properly and you don't defraud the government in this very generous program. And again, timeliness. If you let this thing go a week, my guess, this is my speculation, people, I think that this program is going to run out of money before the week's over. And I also feel that when it does, the government is probably going to have it. Make a resolution to basically extend the program another $300 billion or so. But we don't know that for sure. You'd rather not count on the Congress acting again. You should try to get into the queue as quickly as possible. Now, if you want to know, now here's the part that most of you can go to the website, you look at and get the application and do it yourself, which you're going to have to do the application regardless. I can do all the work for you, but you have to submit the application. If you want to basically do yourself and calculate it based on a very simple method, go ahead and do that. If you want me to do it, let me know, send me an email, and we will basically figure out a way that to basically, because we have to get this done today and tomorrow. So I'm already assigning 2 employees full-time for the next few days just to work on these things, because I know I'm going to get a lot of requests from a lot of you guys. And because of all this time, I'm going to have to charge you for this fee. And I'm thinking that there's 3 kinds of loans. There's going to be small loans, mid-sized loans, and large loans, each of them requiring more work. And somewhere between $350 to $950 we're going to charge to do this. If it's a really, because I have a few clients where the loans are going to be in millions of dollars. And if it gets to that level, I think what I'll do, the State Board of Accounts will allow me, instead of charging you by the hour, I'll just charge you a percentage, like 1 point, which will be cheaper to you than charging you my hourly rate. But you want to basically make sure you do the calculation correct, because that's where the trouble comes. If you make a wrong calculation, when the audit comes in and you got more than you should, that's when the penalties and the fines and all that other kind of stuff comes. Okay. All right, hold on a sec. Sue needs to add more people, she said.
Sorry, guys. Hold on.
All right, so Sue just added a bunch of more people, and we've already went through some very important parts. And I'm just going to say to those people, we're recording this. It's going to be posted on my website, and just go look at that and listen to it, because I've already covered some very important things, particularly the employee retention credit and what we call the PPP loans, the payroll protection program. But this is frankly, this is free money like it's never been given before. And the government created this recession, possibly a depression, and to keep that from happening, they're bailing out small businesses. And this is what this is all about. They want to keep small businesses alive and running. They don't want them laying off employees or furloughing them or reducing their wages. This is what this is all about. And at the end of the period that this is supposed to be covering is from February 15th to June 30th. At the end of June 30th, you have to do another series of calculations. This is where it's very complicated. Another series of calculations saying what kind of full-time equivalent employees did you have on June 30th, 2020? What did you have back in February 15th of 2020? And if the number is the same, then you'll get 100% forgiveness of loan. Again, I'm making a very complicated formula, very simple to understand, but that's essentially how it works. And if you have less, then let's say I have 10% less, then 10% of your loan is not going to be forgiven. So I've had $100,000 loans. That means I'm going to owe $10,000. Now, what happens when I owe the $10,000? Well, first of all, you get a 6-month deferral. So the first payment won't be due until January 1st of 2021. It will be at the current rate right now is 0.5%, which is amazing. Although they're allowed by law to go up to 4%. And on my memo, I said it was going to be done over 10 years. They've changed that since then. It's for 2 years. You got to pay it back within 2 years. So the whole point here is to try to give you this loan, which will help you pay for not just payroll, but your ordinary business expenses, is to keep you running as a small business and keep your employees employed. That's the whole point of this. So right now, actually, I would love to say I ask you questions, but I want to get through the rest of it. There were other things that I want to bring up. I mentioned them in my memorandums, but couple things I want to bring up that for the individuals that the IRS has, under this law, under this legislation, has relaxed a lot of restrictions with regard to retirement accounts. So in the past, if I had, let's say, $100,000 in my 401k account, I was allowed a participant loan up to $50,000, but it has to equal at least 50% of the vested amount. In other words, for me to get $50,000, I have to have $100,000. $100,000 times 50% is $50,000. But I can have $200,000 in there, and 50% of $200,000 is $100,000. They don't allow you to do $100,000. It was a maximum of $50,000. Under the new rules, that same $100,000, you can borrow $100,000. The maximum went up from 50 to 100. Now, why is this important? Let's say, for the sake of the discussion, you've got a credit card debt of $80,000, or any kind of debt that's paying any kind of interest. You can borrow $100,000 per participant. So if it's a husband and wife, that's $200,000 out of your 401k. Pay off that debt, and then you just pay your self interest, very small amount, 2%, back to your plan. So this is something you guys will want to talk to me about, for planning and managing your debt and managing your business. Another thing the IRS has said, if you decide not to pay it back, you can then, instead of taking it as income in 2020, you're allowed to take it in income over the next 3 years, 21, 22, and 23, which is effectively discounts the taxes. And you can eliminate that to the extent that you decide to pay it back over that 3-year period. So I thought that was very, very important thing that the IRS is, that the government passed that's not getting much attention, but I think will have a lot of value to a lot of my clients, because you do have retirement accounts out there. You want to be, you're not 59 and a half years old, so you don't want to get penalties. And now you have a way to access, for most of you, $200,000 of it without paying virtually any interest, and paying off other corporate debt and business debt. Moving on. Then the next thing is I want to talk to you about is everything I talked to you under the SBA is under the 7A program. Under the other conventional SBA program, they've launched another. There's always been available in the SBA something called EIDLs. That's economic injury disaster loans. Usually they're reserved for people who went through tornadoes or hurricanes, but the coronavirus is considered an economic disaster. So you can get eligible, and it's not only are you eligible for it, but it's very, very generous. And the interest rate, it can be usually SBA loans amortized over 20 years, but due and payable in 10 years. Many of these EIDL loans, it's a 30-year loan. The interest rate is 2.75% for nonprofits. I have a number of clients who are nonprofits, and institutions like schools and so forth, or 3.75% for businesses. Now, the great thing about this loan, they raised the level to the loan to $2 million for working capital. Now, to get a working capital loan is very difficult. And to basically make it easy to get a working capital loan in the amount of up to $2 million, that is amazing. And so for those who qualify, you want to take advantage of this. Now, it will take time, unlike the PPP loans, which should basically be processed in a matter of 1 or 2 weeks. EIDL loans is going to take a lot more time. So to help you, I'm just astonished how generous this bill is. In the meantime, you can apply for an EIDL grant, which is worth $10,000, very easy to apply for, very easy to get. You get $10,000 non-refundable. And so by the time, so you get this $10,000 grant, you're waiting for the SBA to approve or not approve your EIDL disaster loan. And they say, no, we're not going to give it to you. You get to keep that $10,000. No, don't pay any taxes on it and everything. They're just giving you $10,000. So that's how I read it. But of course, you really want the EIDL loan, because think about how the interest rate is going to be very, very manageable, and you can basically pay off a lot of debt and help manage your operations very comfortably over the next 12 months. And that's what this is all about. To basically put it, this is not available to large corporations. This is available only to small corporations, to keep them in business and keep them humming, so that when it comes to the point of when eventually this craziness stops and people are allowed to go back to work, the economy can actually recover very quickly. So that's one last thing on the EIDL loans. Again, remember, there's going to be inspector generals on here. Don't cheat, don't use it, abuse it in any way. You will eventually get caught, and it won't be worth it. For example, you can't use an EIDL loan to finance business expansion. You have to, it's a working capital loan, but that's a very generous definition in itself. Think virtually every expense of your business is a working capital expenditure. So for example, for the PPP loans, you're allowed to use some of that money to pay the interest on your mortgage payments, not the principal. In the EIDL loans, you can use it to pay the principal. So it's, and so forth and so on. Okay, so what time is it right now? It's 12:25. This is about all I want. I wanted to get through this as quickly as possible so I can answer, spend some time on questions and answers. So did anybody have any questions? I'm not sure how this works. Have Sue Marie come in here if they're typing it in and so forth. Go ahead. I hear somebody talking. Wait, hold on, wait until Sue gets in and she can tell me how this is going to work. Let me give you, write this down, everybody. For the website for the EIDL loans, it's in my memos I sent you. You want to go to their site, which is https://disasterloan.sba.gov/ELA/ so let me go again, https://disasterloan.sba.gov and //ELA//, and that will get you to their site. Their customer service email and phone number. Again, I gave it to you in my memo. If you didn't get that memo, email me. We'll resend it to you. But in my memo, it's disaster customer service at sba.gov. Disaster customer service at sba.gov. And they have a customer service number. My experience with government phone numbers is not usually very good, but you can try it. 800-659-2955. And that's open 7 to 9 p.m. Eastern Standard Time. Okay, Sue, you're here. So how do we handle questions?
So this is, everybody is typing in questions to you here.
Oh, okay.
Hello, Mike.
Hey,
See, and they
Jim?
unmute themselves.
Can you hear me?
I can actually hear you, but right now I'm going to read this one. This is from, okay, let me read. I got the group chat here. Don't, everybody stop talking. I'm hearing all at once, okay? And I'm going to read the question and then answer it, okay? Hold on a second, okay? This is from Teresa. So will applications for the payroll protection program be done personally by the application directly through the SBA or through local banks? Very good question. That's a basic, practical question. So you should do the application. The application you can download. You go to their website and you download it. Okay, it's very easy to fill out. I filled one out just to see how hard it is, and really, frankly, it took me like 10 minutes. It's a very simple application. But the problem is, the very first question they ask you is, what's the payroll calculation amount? That's the complicated. That's where you need me or somebody, or if you feel you're competent to do it, to do the calculation to make sure you get the maximum amount legally available to you. And that's what you're going to submit into that application. So we'll do the actual calc that you put onto the app. And then now it goes to a bank. That's where the app is going. The way the system works is the SBA guarantees the bank. The bank pays you the loan. And after the end of June 30th, when you want to do the forgiveness calc, that too goes to the bank. And the bank has 60 days to approve it or not approve it. And the bank is going to be held accountable by the SBA that basically they did a good job on that. So you do want to have a banking relationship with the bank if possible, because you don't want them to screw with you. I hope that answers your question, Teresa, and for everybody else who will think of the same thing. Can you use, this is from Kavitha, can you use the PPP loan to pay for independent contractors as well, or is it restricted to payroll, utilities, rent, and benefits? No, you can. You can use it for independent contractors. In fact, this is really one of the more interesting. This is just coming hot off the presses. This is on Business Finance article this morning, and I talked to various other CPA firms, regional and national, and I'm getting consensus that part of your payroll calculations are certain independent contractors that you pay. So that would probably, so you want to include that in there to get a bigger loan amount, and also to get then you're going to use it to pay the independent contract, and then you're going to get it forgiven by the government. But there is in that part, remember, 75% of the PPP loan has to be used for payroll. I consider this independent contractor part of the payroll, unless the independent contractor is doing something that has nothing to do with your company. For example, I have an independent contractor that washes my windows. That would not be considered part of my payroll. But I have an independent contractor that does CPA services, that would be. And the other 25% can be used for things that like utilities, rent, And benefits are part of the payroll too, Kavitha. So that's not part of the ancillary. So that's part of the things I have to help manage you with. Remember, when you get this loan, what are you going to do? You're going to open up a bank account. You're going to put the money into that bank account, and then you're going to pay out of things. I tell you, you can pay out of it. You're going to make sure you don't exceed 25% in any other category, because if you do, you're going to end up, you're not going to get forgiven for that amount. Okay? And from Valerie, I can't read it, so can you scroll up?
My questions.
It says, Valerie, some are saying, oops, you went too far.
What?
Yeah, Valerie Kessler, okay. Some are saying that if you are a sole proprietor with no employees, you can still apply. Yes, you can. It's actually pretty amazing. I mean, think about it. Let's say I have John Doe working for me as an independent contractor that's a sole proprietor. I'm going to get a loan for him. And then he can turn around and get a loan for himself. It's pyramiding, but they're allowing that. Okay. So, but then again, you have to make sure that you're doing everything properly. Okay. So dot your I's and cross your T's. Yeah, it's easy arrows. Okay.
Ali's on here too.
What is he?
Okay.
You go up still?
I can't tell what you want.
Well, you go
I
there.
already did that, Valley. Go down. Okay. Okay. MGG.
That's good, Susie.
Okay. This is, well, it just got moved.
Where's Peggy and Ollie? iPhone.
Okay. Are we able to use a PPL loan to pay for the house rent? Or is that only for mortgages? And do you know anything about the $600? Well, that's a lot of questions in one question. You cannot use a PPL loan to pay your home rent. You can use it for your business rent.
Yeah.
But only up to 25% of the loan. And they asked, they said, I know anything about the $600 that was announced to be added to the unemployment weekly? That's another whole seminar. The government has raised unemployment, whether you qualify or not, in terms of the dollar amount. You're going to get that $600 on top of the $450. That's $1,050 per week, and that's going to be really a problem for a lot of business people, because a lot of employees, not everybody, a lot of employees will stay home and not work if they can collect all this unemployment, which is giving them roughly the same amount of money as if they went to work. But that $600 is. I'm getting a lot of questions from my small businesses, because they see this as being really harmful to getting the employees back to work. But yes, it's going to be very generous for 26 more. No, it moved up from 26 weeks to 39 weeks. So that's another whole seminar. I can go on for a long time with that. Regarding PPP, how do you answer if you have multiple companies? Very good question. First of all, you're required to include multiple companies in the application. Anything that you have over 20% interest in, you have, in my opinion, anything you have controlling interest. So if you have like 10% control interest in a company, but you're 100% in control of it, you should include it. And it will only add to the loan amount, but they do want full disclosure on all the multiple entities.
Yeah.
Okay, let me go scroll down here a little bit.
You know what I mean? That's why everybody's going to be so different.
Let's go back up a little bit. Companies backed by angel investors qualify the PPP loan. I don't see why not. It's the whole purpose of the bill is to keep small businesses in business and to keep them from hiring, furloughing, or reducing the wages of their employees. Doesn't matter to me. It doesn't matter whether or not this thing was financed to a private equity firm or angel investors, etc. They heard that private equity and VC-backed companies may not qualify. I don't think that's the case. But you got to understand, most companies that are backed by VC and PE companies, they usually have more than 500 employees. and they therefore wouldn't qualify for that reason. This is only for companies with 500 or less fewer employees. Okay. On the 401k loan, do we have to pay it back to the 401k plan, or can it be paid into another qualified plan? You pay it back to the 401k plan, and you want to do that. But the thing is, you have 3 years to pay it back, and if you chose not to pay it back, you can actually set it up as a 5 or 10-year loan at a very low interest rate. If you decide to not pay it back, you have 3 years to basically declare it as taxable income, and you can pay it back within those 3 years. And let's see, if a restaurant was closed down 2 to 3 weeks ago, can you still apply for PPP if you intend to reopen up soon? That's a very, very good question. Yes, the question is an emphatic yes. You should be the first person in line to get a PPP loan and an EIDL loan. Now, this is when we get into the FFTEs. So here let's say on January 1st, let's say February 1st, I'm a restaurant and I had 40 employees. And here it is today on April 1st, and I have no employees. And now I want to get the PPP loan. You get the PPP loan and you're going to get the EIDL, so you need to talk to me. You got to get it back up to 40 employees by June 30th. Otherwise, a lot of that loan is going to be, you're going to have to pay back. And you won't get 100% forgiveness, but you can get most of it forgiven. But you need to get up and running as quickly as possible. Thank you for doing this. Very good. All right. Can you give us the website address to rehear this recording? What's the website address? So, do you know offhand?
So we'll send a link via Dropbox or email. We're not sure how yet, or we'll post it on Mike's
Website.
actual website, which is mdcpainc.com.
Yeah, if you just type that in, you'll get my website. And I'm going to have my website provider to make sure that they post this recording on there. I'll try to get it done before the end of the day. Another one of my clients, may I furlough some employees I cannot afford while keeping others if the loan does not cover the whole payroll? The answer is yes, but to the extent that you furlough these employees, it's going to reduce the amount of your loan that's going to be forgiven. And you may find out that you're actually losing money by furloughing it. You have to do it, it's an economic analysis, a cost-benefit curve. And by my reviewing of all this information, it seems clear to me that it really, for the most part, works in your benefit to keep the employees on at their current rate. Do not furlough them. The government's going to pay for it. And that's the whole point of the bill. You know, so and if you turn around and take the money and you still lay off employees or furlough them or reduce their wages, then you're going to get punished. What if you have no employees and or independent contractors? Can you still apply for the PPP? Yes, you can. So let's say you're self-employed and you make $100,000 a year. Let's make it easy for me. You make $120,000 a year as a self-employed individual. Divide that by 12, that's $10,000 a month, multiply times 2.5, that's $25,000, add all the other ancillary costs to payroll, it'll probably get around to $30,000 to $34,000, and that would be your loan that you would get. Okay, my own husband owns rental monthly units. I think you're asking, is he qualified for this? You know, many of your clients that have multiple units, I've told you to put it into a corporation, to treat it like a business. To the extent that you treat it like a business, you're in better shape to qualify for this. But then the key is you have to have self-employed earnings coming from that. So remember I told you a little while ago, they're going to look at the 2019 tax returns. So the 2019 tax returns, we should make sure we show self-employed earnings or wages coming from these the management of these rentals, and then you'll qualify. Very good question. It takes some specialized tax planning, but the answer is yes, it can be done. Can you define FTE? Okay, that's very good. I kind of breezed over that. All right, so FTE stands for full-time equivalent employee. So let's say I have 10 employees all working full-time. that means I have 10 FTEs. But let's say I have, 14 employees, 10 work full-time, and the other 4 work part-time. Now, they haven't really given us guidance what they qualify for part-time, but I'm guessing that they're going to eventually say that the part-time employees have to be added up together to equal a certain amount of full-time employees. So if I have 4 part-time employees all working 20 hours a week, that's equivalent to 2 full-time employees. So for the formula that I'm going to do the calculation for forgiveness, I have 12 full-time employees. Now let's say those four part-time employees were all working 5 hours a week. Well, those 4 combined only totals to a half of a full-time employee. So it's a calculation we need to do, and it's very important in order to calculate how your loan gets forgiven in June 30th. It's not so important right now in terms of figuring out what your loan's going to be today. Does a company entity have to be incorporated before a certain cutoff date? No, it just has to be in business as of January 1st of this year. And it doesn't have to be a corporation, doesn't have to be an LLC. It can be a regular Schedule C enterprise. What documents are needed? Well, all the documents are going to be needed to basically to verify whatever numbers I come up with or you come up with. You don't need to submit it in the app. The app is easy, get it in, but eventually they're going to come back to you and say, now give me the documents to support your numbers. That's another reason why I think you probably want somebody like myself doing a lot of this stuff. If you have not filed 2019 taxes, if you are an S Corp and take payroll, and then traditionally take a larger percentage of our income as capital distributions, would it make sense to increase our W-2 wages for 2019 before we file the PPP? Yes, it does actually. But remember, what you call capital distributions is not capital, it's income distributions. And you just have to subject that income distribution to self-employment tax, and we'll do the same thing. Yes, it's obviously strategically, it is smart to show as high wages as possible in 2019 to take advantage of the PPP loan in 2020. However, there is an exception. They said if you look at your wages from January 1st of 2020 to February 15th of 2020 and annualize that, and that's higher than 2019, you can use that. So take, for example, myself, I'm a CPA, right? We're in the middle of tax season. Of course, my wages are higher during this period of time. And it's going to annualize to a much larger amount than it would be if I look at the whole year of 2019. So I'm going to use that period instead. Okay. I have 2 rental properties that the renters cannot make payments. Do I qualify for a CARES Act? So you suffered from the COVID-19 problem because people aren't paying rent. And remember, the PPP is predicated on your payroll, on your income you've paid self-employment taxes on. If you haven't paid self-employment taxes on your rental income, you don't qualify for a PPP loan, even though you're suffering from the COVID-19. However, you do qualify for the EIDL. So it's one or the other. But there's another reason why you may want to have your rental properties in a corporation, then you issue yourself self-employment income, and then you qualify for the PPP. Okay. What if you have no employees, no independent contractors? I already covered that. You still can apply for the loan. I'm trying to get to, there's so many questions here. Our tax return is on extension, so how can we get current info for these programs? Well, get your tax return done. that's the easiest answer. But you can submit what your pay has been from January 1st to February 15th of this year, as your guideline for the PPE. There's every. I'm sure that you should talk to me. We should take a look at it, and I'm sure we could come up with a way that you would qualify. We don't have to submit the tax return. If we have data just that we know we can support upon audit, that will work just as well. My question is, I own my office building and I have a mortgage, but I have leased it to my business with rental income. Which one I could use to rental from business? Which one I could use, rental from business or my personal mortgage interest? In this case, if you have an office building in which there's a mortgage interest, you can use a PPP for the mortgage interest. You can use the EIDL for the principal on the mortgage. The EIDL and the PPP is not geared to help pay your home mortgage, but for business debt. And somebody asked, it's a good question. How does the FTE calculation work for independent contractors? I think it works the same way. I think if you're going to use the independent contractors as part of your payroll calc, then you should use the independent contractor as part of your FTE. Someone said, well, how do you calculate payroll if you have no employees? Is it a partner draw? Well, to the extent that you pay self-employment taxes on your partner draw, yes. That's key. You pay self-employment taxes. Otherwise, you don't have wages. Okay, and I think that's, have I hit all the questions? I think I have. I think that's everything. So where do we go from here? Oh, wait a minute, I got one new message here. Let's see. Do employees clocking 32 hours a week plus benefits qualify as FTE, or do they have to work 40 hours? Actually, that's a very good question. I don't know the answer to that. I should find out, because in so many parts of legislature, 32 hours is the cut point to qualify as a full-time employee, for example, for group medical insurance purposes. But for the purpose of this act, is 32 hours or 40 hours constitute? My leaning is based on other SBA programs, it's 40 hours. But like you said, here a 32-hour employee qualifies for employee benefits. So it could go either way. That's a question I should basically write down and find out the answer on. And then somebody said, can I, okay, get more than I need. Is the economic injury disaster loan the same as the PPP? No, it is not. One is the PPP, if managed properly, is 100% forgivable. The EIDL is a real loan at 3.75%, or 2.75 a year nonprofit, and you pay it back over time. And the PPL loan is going to be based on a factor of your payroll. The EIDL can go as high as $2 million, and it's a working capital loan, and you can apply for both. Who are the two people assigned? That would be Sue Marie and Harry. You know, so Harry promised he'll try to be in his best personality. But they should be able to get you through it all. And of course, I'll be reviewing everything.
So can I speak now? Everybody's asked you all the questions.
One more question, Jim, before we go in there. So would you be willing to do a follow-up webinar pertaining to 1099 independent contractors for those of us that have a lot of them? What to make sure they know what they are eligible for? You know, I want to help you guys as much as possible through this troubled times. To be honest, this is my personal feelings. This is crazy. This is just crazy what they're doing here. They're shutting down the economy. From an empirical objective analysis, we're looking at a very low mortality rate. It's crazy. And people are really, really struggling. I mean, clients are being laid off. My business clients, they're laying off people. Their businesses are going from being very profitable to close to bankruptcy. This is no laughing matter. But I have to say, I am pleasantly surprised of how good this bill is written. This bill is designed not to pass economic stimulus, not to support one industry over another, not to subsidize certain influences over others. This is designed to go directly to the American people, to spend the money, to survive, to basically to keep businesses operating. And I think it will accomplish that. We can get back to work, let's say, but we'll be okay. Otherwise, no. But I will do, to answer your question, I will do other seminars if there's enough demand for it, and if I feel like it's needed, because there's so many things that's going on out there. Now, you realize why I did the seminar today, because tomorrow morning, Friday morning, the PPP loans applications are going to be accepted. And you needed this information so you can start working on this, and you can let us know if you want us to help you so we can get in the queue as quickly as possible. Okay, I think that's it. And does anybody else have a question? Jim, you have a question?
Yeah, I mean, we have several corporations.
Yeah.
Obviously, those corporations, they don't have employees except my wife is the one employee. So do we file those applications with the bank or the SBA loan?
All right, so and Jim is asking a question. What happens, and I have a lot of clients have multiple corporations, and many of you have clients, many of you structured the same way. You have a main operating company that might have anywhere from 2 to 100 employees. And you have a management company in which you and your wife are employees. For the purpose of the PPP, to make a complex question easy to understand, they want you to report all the entities and treat it as one company with all the employees to come up with a payroll count. I've left out a lot of details because there's just too much to cover. For example, one of the details is you're not allowed to count wages over 100,000. So if you got a wage of $200,000, let's say $150,000, I can only, for the payroll count, can only count up to the first $100,000. The other $50,000 doesn't get counted. And that's true with independent contractors as well. Is that everything? I mean, any other questions that answer your question, Jen? Okay, Elizabeth.
Yes, sir, thank you.
You reach out to Harry or Sue via email. No, you email my firm, and then we will basically assign the work accordingly. Okay, so send it directly to me or Andrea, and then we'll basically, coordinate all the work. We've already got a number of emails from clients asking us to do this, so we will try to prioritize it. I told Steve, Harry, and Sue, we'll probably get a lot of requests. Try to prioritize by greatest need and drill down. Any questions?
I just want to thank you, Mike, for everything, and I'm glad you and your family are healthy and safe, and your employees and their families.
Thank you. We're doing well. I appreciate that. I guess that's it. What time is it? It's 1 o'clock. I will try very hard to get this on the website before the end of the day, the recording of it. And by the way, the memos I sent out to you guys, you're welcome to resend them to whoever you want to. I want people to know what's available and to take advantage as quickly as possible. All righty. God bless everybody. Take care, and let's just pray that we get this thing taken care of in the next 3 to 4 weeks.
You have 5 minutes?
Yeah, sure. Well, yes, Anthony. I'll call you on the phone. Is that okay?
All right.
All right. Good night. Goodbye, everybody. How do I disconnect here?
Take care of it. Bye, everyone.